You are watching RC Invest Global, your channel for financial analysis with rigor, clarity, and strategic vision. Subscribe, activate the bell, and follow market transformations in real time. The world's largest asset manager, BlackRock, is about to reach a historic milestone: $100 billion in assets under management in its Bitcoin ETF, the iShares Bitcoin Trust, IBIT. Less than 2 years after its launch, the fund that many once considered a risky bet has become the fastest-growing ETF in the world. And this milestone is not just symbolic. It reveals a profound shift in how traditional finance now views digital assets. With this volume, IBIT joins the exclusive group of the world's 20 largest ETFs, of which only 18 have surpassed the $100 billion mark. A feat that not only cements BlackRock as the industry leader, but establishes it as the dominant force in a market undergoing a full technological transition. Meanwhile, its closest competitor, the Wise Origin Bitcoin Fund, FBTC, from Fidelity, represents only a quarter of its size. The gap is colossal and shows that BlackRock is capturing nearly all institutional confidence surrounding crypto ETFs. But what's really behind this dominance, and what could it mean for the future of the global financial market? According to the Sovereign Wealth Funds Institute, BlackRock currently manages around $12.5 trillion in assets worldwide. Within this financial empire, IBIT stands apart. It's living proof that the integration between traditional finance and crypto assets is no longer a hypothesis, it's an expanding reality. The company also manages the iShares Ethereum Trust, an $18 billion ETF, reinforcing its position as the main bridge between Wall Street and the digital universe. Despite this dominance, the firm has shown no immediate plans to expand into other crypto assets such as XRP, Solana, or Chainlink. A silence that raises curiosity. Is it prudence or strategy? Tyrone Ross, CEO of 401 Financial and Turnkey Labs, summed it up bluntly. The ETF market belonged to BlackRock long before crypto ETFs. Everyone else just gets the crumbs. Ross highlights a crucial point. Even those crumbs can still mean billions of dollars in assets under management for other companies. But it's impossible to ignore BlackRock's structural weight and how it continues to redefine the rules of competition. According to Bloomberg analysts, IBIT charges a 0.25% fee, generating around $240 million annually in revenue. In other words, the fund is not only the most popular, it's also one of the most profitable within BlackRock. And its success has triggered a domino effect. Other asset managers are now racing to launch their own digital asset ETFs. The SEC, which until recently was highly cautious about such products, has now loosened restrictions, allowing new crypto ETFs to be listed with far fewer barriers. This decision opens the floodgates for a wave of new funds, promising to diversify investors' exposure to the crypto sector. But is there really room for that many competitors? Or are we witnessing a new kind of silent monopoly, where only the giants have the strength to survive? Mike Casey, president of AE Advisors, believes Bitcoin still holds a natural advantage. According to him, Bitcoin remains the only digital asset with global adoption and a solid reputation as a store of value. And spot ETFs, he says, are the most practical and secure way for clients to gain exposure to crypto markets without leaving the traditional financial system. But not everyone sees it that way. Some analysts argue that IBIT's overwhelming success could concentrate too much power in the hands of a single institution, reducing diversity and competition in a market that was born to be decentralized. This irony raises an important question. Is the crypto revolution slowly being absorbed by the very system it was meant to challenge? Behind the scenes, the movement is intense. BlackRock recently filed for a new iShares Bitcoin Premium Income ETF, targeting institutional investors seeking additional yield. Other firms are also making moves. Rex Osprey has proposed 2 ETFs with staking capabilities, while S&P Global is developing the Digital Markets 50 Index in partnership with Denari, which will issue a token to track the performance of these assets. Everything points to a new era of hybrid products, where traditional investments and digital assets increasingly intersect. And at the center of this revolution stands, inevitably, BlackRock. The question is, who comes next? Will we see ETFs based on Solana, Ripple, or Litecoin gain institutional relevance? Or will Bitcoin's dominance remain absolute? Tyrone Ross ends with a prediction that sounds more like a warning. The door is now open for other types of crypto ETFs. It will be interesting to see what comes next. Indeed, the next regulatory decisions, both in the United States and Europe, will be decisive for the future of crypto ETFs. Each new approval could generate billions in volume, strengthening the link between traditional finance and the decentralized universe. But it could also bring these two worlds closer irreversibly, raising the question, are we witnessing a new financial paradigm or the beginning of total centralization in the crypto sector? For attentive investors, this is a time for strategic observation. IBIT's evolution mirrors broader macroeconomic trends and the institutional appetite for digital assets. And, as always, BlackRock's moves are more than just financial decisions. They are signals of where global power is truly shifting. Waiting. This content is for informational purposes only and does not constitute financial advice. Every investment decision should be based on personal analysis and professional guidance. If you enjoyed this analysis, subscribe to RC Invest Global, activate the bell, and follow with us the main trends of the global financial market. Information and vision, here in real time.